Hey everybody, Cowboy here. Today we have a quick look at the SP500 and what it might do over the next several weeks. This is also a good indicator of the rest of the market. It's a pretty valuable chart, so enjoy. Stick around afterwards for more information on how to find us and what we do. And a good way to look at that is going to be the SP500, I think. You can use, there are other measures, but SP500 I think is a good bellwether. You got the Dow, which is your basics. You have SP500, which I think is a little more diverse in a sense. And then you have your NASDAQ, which is all tech-based, right? So if you want to have an idea of tech, then you look at the NASDAQ. If you want to have an idea of actually kind of first movers in transportation, you want to look at the Russell 2000. The Russell moves before a lot of things quite often, which is going to be preceded or at least coincidental with the Baltic Dry Index, which is dry shipping. So, and Russell has to do with shipping and transportation, if I'm not mistaken. Stocks are my thing, but I know a little bit, right? So we had this rally, and it did not, it couldn't break this, right? So what we have now are some areas of interest for a fall in the Russell. I'm sorry, in the SP500. So our impulse that we can look at, there's a couple. On a higher time frame, it's this whole impulse from the bottom, right? And on the lower time frame, you can do this shorter impulse. We'll look at both. So let me get rid of this fib real quick, and we'll start over. We have our fib retracement tool. We'll start at the bottom, head to the top. Our 618 is sitting at 39.30. I think I did this before, so you might have already seen this, but 39.30 is our 618, and our 782 is going to be 37.50. Doesn't mean it's going to go that low. There's also a 382. I mean, we're just looking at areas of interest. We're not looking at what's going to happen. With the SP500, there's a lot of price action that is sitting right at that 382 at 4,200. So there is a decent chance price could kind of stop there, grab some liquidity, and head back up. But that's going to have a lot to do with what's happening, I think, in the banking sector. And as long as we're hiking rates, and as long as things are going how they're going, and if we get especially a bit of a surprise, perhaps something to do with the bricks. Oops, did not mean to do that. Now it's going to go to light theme. Sorry. Let's go back to dark. My eyes. So anyway, let's undo that twice because it killed my whole scheme there. Close your eyes. That's one way to wake up. It's just worse than coffee. And then, like I said, we might have something to do with bricks. I don't know. The gorilla might give us some information on that. Do we have any drips this week that you know of yet, or are you still gathering data, V?
This Thursday, buddy.
All right, you guys hear that? Drips this Thursday. Going to put in
Thursday.
Drips planned for this Thursday. And drips usually happen. Sometimes we require a little more time to put it together, but generally they're planned for this Thursday. I just did an announcement on the channel. So, all right, cool. So we got basically price heading down to some points of interest, right? As per the fib tool. So we're going to go to our fixed range. And where are my favorites here? Fixed range volume profile. And we'll do on the same impulse, bottom to top. And then we'll, okay, so price is going to be attracted to these poke outs in volume. So the 382 is before that. So there is going to be, I would move this down a bit. Point of interest, instead of 42, I'll go down to 41.38. So let's do this. And then here, point of interest, instead of say 39.39, I would bring that up to the center of this volume mass, which is going to be 39.90-ish. And then this 782, this is 37.45. It's getting a little beyond the where all the volume is. It could go down there, especially if there's a surprise. But barring a surprise, barring a black swan, I would actually raise that up to 38.40. Because that's where that blue line you see. Let me zoom this in so you all can see what I'm talking about. It might be a little tough to see. So this blue line on the fixed range and that blue line, these are called the volume area high, volume area low. Price does not want to go beyond these generally, but it can. And when it does, it might even go pretty hard, but it generally does not want to go beyond that. It wants to stay where the volume is. So that being the case, those are my 3 areas. Now, do be careful looking at this, because right now, price went way up here. It's going to want to see how this volume area was like this. It was like this before it went up, most likely, and it broke out of the volume area and it really skyrocketed. Now it's going to want to come back down into that value area, right? However, you do have some blocks where there's just no volume, and price has a hard time it's staying in that area. It wants to reject and go towards the closest volume, which is up here. However, it may not do that because it's not a lot of volume. Most of the volume's down here in the value area. So you'll probably have some bumps. Let's do this. Let's map these out. You got this area with no volume, which is where price kind of is right now. And you can see already that price rejected right off of that. Whoops, wrong button. You see how price rejected right off of that? I mean, I could have told you that was going to happen ahead of time. It just came down, rejected. And this was a pretty hard dump. So there's a decent chance price is going to, want to bounce back off that. And remember, we still have a whole other local range to look at, but you have another bit right here. That's that same kind of scenario. So the price is going to have a hard time getting through this, but in the proper market scenario, it will. So we have some points of interest. We have a fib. And now we're going to look at a quicker impulse, the more local one, for some more local price action. The bigger stuff that I have here, the notes I already have here are more relevant than what I'm about to do. So what I'm about to do, I'm going to code it orange. But we're going to do the same thing. We have this impulse from bottom to top, right? So we're going to do our fib from bottom to top. And we have 382 is right there already in an area that we have looked at. 618 is already there. So that's just, we're not going to change that. The 786 is already mapped out. And this bottom is just the bottom here. So I don't see any reason to add any notation here. I mean, there's confluence, but who cares? The higher time frame does take precedence. So we're not going to need to add anything to that. Those areas are already of interest. So that's good. And then we have also our, let's undo that real quick. Oh, no, that's good. We'll do our fixed range just for our local calculations. Okay, so already we have the same notation. We got this break here, break there, price wants to reject off of that. And then we have price being pretty well attracted to this 4138 on the S&P. So, and then we have this volume out here, which also is a place of note at 3990. So the areas I would really be looking at for the S&P to come down to are going to be these two, 3990, 4140. Okay. And I actually did this like a couple weeks ago, and price is moving along at the clip that I would expect it to move. But let me kind of like these areas right here where there's no volume, there's a good chance price is going to meander about, especially in August when there's not a lot of volatility. Of course, we've seen a lot of volatility this August. So, this, as V predicted, has been a hot month and when it comes to volatility, but we might kind of see price meander about and then kind of pull some of this stuff. And then, this might be a stopping point, might go a little bit deeper, rally up to here, and then we might see our stop right here. And that could happen on the timeline that I've drawn. It could happen more quickly. That I'm just drawing what I think the price action will be. But if this goes, let me see. Yes, if it goes any quicker than this, then it's going to be event driven. If you ask me, that's my opinion. But this is kind of what I expect to see as a continuation of what we've watched. So, on the S&P, let me see here. So it's pretty bearish. I mean, any rallies that we see, I think we're right now at least I think we're in sell the rally mode. So, and then the S&P, you can short stocks if you have access. If you're trading like the E-mini, you can always short on the E-mini. I think those are what considered to be ETFs, if I'm not mistaken. I don't play that game. But you can short those. you can short stocks. You can. That's one thing you can do. There's a little more risk because shorting stocks, in effect, I think you have to have 1.5 times the amount of stock or assets in order to borrow a stock to short it. So you can lose money. You can lose bigger money shorting than otherwise. So you got to do your research and understand the risks of shorting stocks, because there are significant risks doing that. But it's the same kind of risks that you would experience playing derivatives. So, but that's how I see the S&P. I think it's pretty valuable chart. So we are live every weekday, 8:30 a.m. EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.